Welcome back to the Deep Dive. Okay, here's a question for you. Do you think you can actually start saving gold with just 500 Thai baht? That's what, maybe around 14 US dollars.
It sounds almost too small, right? But the answer is, surprisingly, yes, you absolutely can.
Exactly. And that's our mission for this deep dive. We want to show you precisely how that small amount, that 500 baht, can actually grow into real gold and, importantly, potential profit.
Mm-hmm. It's about finding the right way to save in gold, learning the ropes so you actually increase your chances of, well, making money, not losing it.
Think of this as your shortcut. We're cutting through the complexity.
Right.
Now, why should you care about this, especially right now? Well, I mean, look around. Inflation's a real thing, isn't it?
Yeah.
Your money just doesn't seem to stretch as far.
It's definitely a concern for many, and that's where gold traditionally comes in. Historically, it's seen as something that holds its value.
It often rises when other prices are going up.
Yeah, it tends to keep pace, protecting your purchasing power to some extent. But the common thinking is, oh, gold, I need a lot of money for that.
That's the big assumption we want to tackle. We're going to show you how accessible it actually is now. Perfect if you're a beginner or maybe just want to diversify your savings a bit, starting small.
Absolutely. And it's powerful because gold acts as this sort of counterbalance in your savings. Like you said, when general prices are climbing, gold often tends to follow along.
So it helps protect your wealth.
Exactly. It's maybe less about getting rich super quick and more about, protecting what you have and letting it grow incrementally over time.
That makes sense, a stability argument. So let's unpack the why a bit more. Beyond just inflation, what gives gold this inherent stability people talk about?
Well, look at history. Gold's been seen as a store of value for thousands of years. It's kind of universal.
Right.
It acts as a hedge against economic uncertainty, against currencies going up and down, because it isn't tied directly to one single government's decisions or one specific economy's health.
So it has its own kind of independent resilience.
That's a good way to put it. Resilience. A stability few other assets can really match in the same way.
Okay, but for years, decades even, investing in gold felt, well, exclusive, like something only for people with significant capital. How has that really changed for, the average person listening right now?
That's a key point, because that old perception is really becoming outdated quite fast.
How so?
It's mainly down to how the market itself has evolved. A lot of traditional gold shops, and especially these newer financial apps, they've recognized there's a demand for smaller scale saving.
So they adapted.
They did. They've created ways to get started with as little as 100, or like we said, 500 Thai baht.
Wow, 100 baht. That's incredibly low.
It is, and this isn't just some tiny niche thing anymore. It's a really significant shift. It basically democratizes gold saving, opens it right up to a much, much wider audience than ever before.
So just to be clear, you're saying this is a fundamental change, not just a temporary trend. It's making gold genuinely accessible.
I believe so, yes. It really levels the playing field. You don't need to be a high roller anymore to start using gold to safeguard your financial future, even in a small way.
That's pretty groundbreaking, actually. Okay, so the why is clear stability, accessibility. But let's get practical. For our listeners thinking, okay, I have 500 baht. How do I actually turn that into gold? What are the main paths? Maybe start with the traditional way.
Absolutely. Let's start there. Many physical gold shops, and this might surprise some people, have actually adapted quite well to this micro-saving idea.
Really? Like your local jewelry shop?
Sometimes, yes, or dedicated gold bullion dealers. They often offer gold savings programs. The model is usually an installment plan. You contribute your fixed amount, maybe 500 baht each time.
Okay.
And you keep doing that until your total savings add up to the value of, say, a specific tangible unit of gold. The Congol in Thailand, for example, is saving up for 1 baht of gold.
Hold on, just to clarify for everyone, when you say 1 baht of gold, you're not talking about the currency, right? That's a weight measurement.
Good catch. Yes, exactly. It's a traditional unit of weight used in Thailand and Southeast Asia. It's equivalent to about 15.24 grams of pure gold.
Okay, 15.24 grams. Got it.
So when you're in one of these savings programs, you're essentially accumulating enough cash value bit by bit to eventually own that specific weight in physical gold. You can then usually take possession of it.
That makes perfect sense. Building up to a real physical asset in stages. But, we live in a digital world now. It can't all be about walking into shops, surely.
Oh, absolutely not. For people who prefer the convenience of doing things online, there are tons of modern applications and platforms now.
Like phone apps.
Exactly. Phone apps, websites, these let you buy gold in incredibly small units, sometimes down to zero point 0.1 grams.
Wow.
Or they let you start a savings plan with an initial deposit of just, again, 100 or 500 baht. It's very, very easy to get started. Low friction right from your smartphone.
Okay, so that covers buying gold directly, either physically over time or digitally in small bits. But what if someone's interested in gold's price movements, but they don't really want the hassle or maybe the security concerns of holding physical metal?
Right, that's a valid point. For those individuals, gold exchange traded funds, or ETFs, are a really popular option.
ETFs, we hear that term a lot.
Yeah.
How does it work for gold?
So these are investment funds that are traded on stock exchanges, just like stocks, but their specific job is to track the price of gold.
Wow.
When you buy shares in a gold ETF, you're not buying physical gold yourself. You won't get a delivery of bars or coins.
Right.
Instead, you're gaining exposure to gold's price changes. If the price of gold goes up, the value of your ETF shares generally goes up too, and vice versa. It's a different way to invest, often used for portfolio diversification without needing a vault.
Makes sense.
Yeah.
Different options for different preferences. Okay, so we've covered the why, the stability, the accessibility, and the how shops, apps, ETFs. Now let's get into the really exciting part, the playbook. How do you actually aim to profit from saving gold this way? It's not just about piling it up, right? It's about doing it smartly.
Exactly. Strategy is crucial here. The concept sounds simple, save small amounts, but how you do it matters a lot for the outcome.
So what's the first point of strategy? Timing. Everyone wants to buy low, sell high.
Yes, timing. Look, gold prices fluctuate daily, sometimes quite a bit. Trying to perfectly time the market, jumping in and out based on tiny dips and rises, that's really tough.
Stressful too, I imagine.
Very, and often counterproductive. You shouldn't rush purchases just because the price moved today. Patience is probably the most important virtue here.
Okay, so if trying to perfectly time the market is out, what's a more reliable, less nerve-wracking strategy for someone saving small amounts regularly?
This is where a strategy called dollar cost averaging, or DCA, is incredibly useful, especially for small-scale savers.
DCA. Heard of it, but break it down for us in this context.
It's actually wonderfully simple. The core idea is you commit to saving a fixed amount of money. Let's stick with our 500 baht example at regular intervals, say every month or even every week.
Okay, fixed amount, regular schedule.
Yes. And crucially, you do this regardless of whether the gold price is currently high, low, or somewhere in between. You just stick to the plan.
How does that help?
Over time, this averages out your purchase cost. When the price is low, your fixed 500 baht buys more gold. When the price is high, it buys less gold. So you automatically buy more units when it's cheaper and fewer when it's expensive. This significantly reduces the risk of putting all your money in only when the price happens to be at a peak. It smooths out the bumps.
That makes a lot of sense. Takes the emotion out of it too. A disciplined approach.
Exactly. Discipline and consistency.
So speaking of time, you mentioned patience. What kind of time horizon should people realistically be thinking about for gold savings to, potentially pay off? Are we talking weeks, months, years?
That's a really important expectation to set. Gold is generally considered a better asset for holding over the medium to long term.
Meaning?
Typically, you'd be looking at somewhere between, say, 1 to 3 years at a minimum, often longer. It's generally not suited for very short-term speculation, trying to buy today and sell next week for a profit.
So think of it more like a marathon, not a sprint.
Precisely. Think long-term value storage, wealth protection, rather than a quick flip. That mindset is key to potentially seeing profitability.
Okay, long-term view, DCA strategy. What else? We talked about making a profit. We should probably talk about things that can eat into that profit, like fees.
Yes, definitely. You absolutely need to be aware of the associated costs. They vary depending on how you're saving.
Like what?
Well, if you're using a savings program to accumulate physical gold, you'll likely run into something called making charges or fabrication fees.
Making charges.
Yeah, it's basically the cost of turning the raw gold into the final product, the coin, the small bar, maybe a piece of jewelry. These fees are usually applied when you actually take possession of the physical item.
Okay, so that's for physical gold. What about the digital routes, the apps or ETFs?
For online platforms and apps, there might be small transaction fees each time you buy or sell. For gold ETFs, there's usually an annual management fee, often called an expense ratio, which is a small percentage of your investment value.
So the key is know the fees up front.
Absolutely. Factor them into your calculations so you have a realistic picture of your potential net return.
Right. Okay, this is great practical advice. Let's shift gears slightly to some maybe more advanced tips. Things people can do to actively try and increase their profit potential beyond just basic DCA. You mentioned buying low, maybe buying the dips.
Exactly. Buying the dips can work really well alongside DCA. DCA handles your regular automatic saving. Buying the dips is a more active strategy.
How does it work?
It means you keep an eye on the market, and when you see gold prices take a temporary dip, maybe because of some economic news or market sentiment shifting, you consciously decide to put in a bit extra money at that lower price point.
Ah, so it's like topping up your savings when you spot a potential bargain.
Precisely. Doing this consistently when opportunities arise can significantly lower your overall average cost per gram or per ounce over time. And a lower average cost directly translates to higher potential profit when prices eventually rise.
That requires a bit more attention than just set and forget DCA, but I can see how it could boost returns. What about the mindset side? Does having a clear goal help?
Oh, absolutely. The psychological component is huge in any saving or investing plan. Having a specific, tangible objective is incredibly motivating.
Like aiming for that one bite of gold we talked about.
Exactly like that. Saving up for that defined amount, whether your plan is to keep it as a physical asset, a tangible symbol of your achievement, or maybe hold it as part of your emergency fund.
Right.
That clear target fosters discipline. It makes the goal feel real, not just numbers on a screen. It helps you stick with the plan month after month.
It turns an abstract financial goal into something concrete you can work towards.
Totally. I remember my grandfather, he always kept a small gold coin tucked away, just in case, he'd say. This modern micro-saving approach, it's kind of bringing that age-old wisdom into the digital age, making that tangible goal accessible piece by piece.
That's a nice way to think about it. Okay, so if someone wants to be really savvy, maybe try timing those dip purchases, what kind of outside information should they be paying attention to? What moves the price of gold?
Good question. This is where understanding the bigger picture, the global economic landscape, really helps. Gold prices don't exist in a vacuum. They're highly interconnected with global economics.
What specifically should people watch?
Two key things to follow are news related to the U.S. dollar exchange rate and interest rate movements, especially U.S. interest rates.
Why those two?
Well, gold is often priced in U.S. dollars globally. So if the dollar gets stronger, it generally makes gold more expensive for buyers using other currencies, which can sometimes dampen demand and lower the price, or vice versa.
Okay, the dollar effect. And interest rates.
Interest rates matter because gold itself doesn't pay interest or dividends. So when interest rates on things like bonds go up, holding gold becomes relatively less attractive because you're missing out on that yield. Conversely, when interest rates are very low, gold's lack of yield matters less, making it potentially more appealing compared to low-yielding bonds.
Fascinating interplay. So keeping an eye on major financial news, central bank announcements, that can give you context for gold's movements.
Exactly. You don't need to be an economist, but staying informed through reputable financial news sources or economic reports gives you a definite edge in understanding why prices might be moving and spotting potential opportunities.
Wow. Okay, so we've really covered a lot of ground here. We started with the why accessibility, stability, then the how shops, apps, ETFs, and finally the strategies, DCA, patience, watching fees, buying dips, setting goals, staying informed. It genuinely makes gold seem so much more reachable.
It really is remarkable, isn't it, how something once seen as only for wealthy investors or central banks is now something you can start engaging with, literally, with the spare change from your weekly budget.
It really drives home that core message, doesn't it? Starting to save in gold is completely possible with as little as 500 Thai baht.
Absolutely. And with that discipline and patience we discussed, that consistent small effort, it can genuinely build up into a tangible asset. You could end up holding physical gold that you saved for piece by piece.
And there's that real potential to profit from the price differences over time, too. It feels like a very empowering way to take a bit more control over your financial future, one small step at a time.
It really is.
So we've laid out the knowledge, the tools, the strategies. Now, as we wrap up, here's a little something for you to think about. A provocative thought, perhaps. If you actually did it, if you managed to save up 1 baht of gold, starting from those 500 baht installments, what would you do with it?
Interesting question.
Would you keep it? As a treasure, maybe. A symbol of your financial discipline. Or would you see it as an investment matured, ready to be sold for profit, perhaps to reinvest somewhere else?
Lots of possibilities.
Exactly. There's no single right answer. Think about your own financial goals, your priorities. Let that guide what you would do next. And on that note, that's it for this deep dive. Thanks so much for joining us.